All right, trade pros, good morning. Welcome to our morning market update for this beautiful Thursday, October 3rd of 2019. It's George Papsov, Trade Pro Academy. Hope you guys had a great day. Equity markets are down now 2.6% in just 2 days. Quite a sell-off that was, predictable. We saw this coming. There's a lot of news events that led to the downside. And I got to say this, the Trade Pro team in the room is doing really well. We had a really strong day yesterday. I think 80% of live capital traders were green. And that's how you know that the community is full of trade pros. On a down day, you're able to make money. There's a saying in this business, don't confuse bulls for brains. All right. When the market's going up, you could throw a dart and any letter that it lands on and you purchase that stock could make you money. But the real challenge is on the downside. How do you take advantage of that? And how do you position your portfolio? So that's something that we've done well. Our team's done well. And I'm very proud of the guys and Trade Pro, the femmes, the gals at Trade Pro. Let's keep it going. Love you guys. All right, let's start out with this. The new news item yesterday that came out was the WTO, the World Trade Organization, is giving the green light to the United States to impose tariffs on $7.5 billion worth of European exports annually. So this tariff war is now moving from China, and it is also going to Europe. All right. In retaliation, so these tariffs are in retaliation for illegal government aid or subsidy to Airbus, the airplane maker from the European Union. Trump administration isn't wasting any time with this. They released a page, actually couple page report on hundreds of European products that are going to be subject to these tariffs as early as October 18th, all right, including a 25% levy on French wine, Italian cheese, and single malt Scotch whiskey. So watch out, whiskey drinkers and Scotch drinkers, you're going to be paying a little bit more, but I don't think you're going to mind. All right. The main target is, however, Airbus, the company that makes the airplane in the EU, which faces a 10% duty. Ironically enough, that would actually hurt stock symbol DAL, United States Airline Delta. And the reason it would hurt Delta is because they have a huge contract coming out to buy these Airbus airplanes with billions of dollars in the book or intended purchases in the near future. Now, that question becomes, will they actually look for another purchase order from a company like Boeing or any other airplane maker? All right. So this is going to cause some volatility in the market because it's causing uncertainty. No one really knows how this is going to progress. It's going to be retaliation, how it ends up looking. In the long run, however, the news is this: the trade war is expanding to include other countries now. In fact, the whole European Union. That's a major downside risk. All right. In other news, a little bit to the positive note for you guys as retail traders, E-Trade is joining the fray of companies eliminating commissions on stocks, ETFs, and option trades. This is actually amazing news. TD Ameritrade announced that they would do it a couple of days ago. They're down 29% in their stock this week because obviously commissions are a big source of revenue for these brokers. Charles Schwab did the same, down 12% this week, and Interactive Brokers announced they would be removing commissions for stocks, ETFs, and options as well. They're down 12% this week. So while the retail or individual investor loves this news, the market and the investors in the companies do not love it. The shareholders are not in love with this and selling the stock. All right. Here's what the CEO said of E-Trade. He said, with this new commission schedule, we're further raising the bar. I'd say lowering the bar, but they're raising the bar, delivering an unrivaled experience at price points that cannot be beat. All right. They estimate, however, a quarterly revenue impact of $75 million from dropping these fees. So let me tell you something. I had this discussion in the trading room. I'm going to keep it brief. Yeah, they have a great platform. Interactive Brokers especially has a tremendous platform, but part of that platform's development and maintenance cost comes on the back of needing revenue to support it. So they have great products now, but those great products were built on the back of commission-paying clients. All right. Now, when that gets stripped out, you're going to probably lose some of the functionality down the road, and they're going to say cost savings. Like, hey, we passed the cost on to you. So you got no commission costs, but you got a crappy platform. Congratulations. And then, as I said yesterday, everyone's going to drop to zero, race to the bottom, no commission. And somebody eventually in 2 years, when all the platforms are garbage, somebody's going to come out with an innovative concept, say, hey, I could charge commission and make a great platform again. And then they're going to run on the back of make trading platforms great again. And they're going to have the hats and everything. And then the industry is going to go back to a revenue model. But here's the thing that a lot of people don't realize. For brokers, only 1/5 of the revenue is generated on commissions. All right, that's why companies like Robinhood, and I'll talk about Robinhood in a second, they started this no commission cost um, model, and it happened a couple of years ago. I was actually working at the time for a brokerage company in Canada, and I told them this is trouble for all of you guys. I wasn't intending to work there for long. It's trouble for all of you guys because in the future, that means you're going to have to drop costs too. It's a race to the bottom. Nobody listened. However, now everyone's matching those no commission fees. Here's how brokers make their money. Johnson's Brexit plans, back news. Number one is commission fees. They're cutting that revenue source. The second one, and the most, sometimes this actually makes more money than commissions, is foreign exchange. So if you call your broker and you want to convert money from US Canadian, US to Euro, whatever it is, they're going to charge you a markup on the rate that they quote you. They make a lot of money through foreign exchange. The other way they do is margin lending. If you have a portfolio of stocks that you hold long and it's in a margin account, they lend your security to short sellers. Right, that's part of the agreement. So margin lending is a huge source of revenue for them. Another one is cash deposits. Although the Fed now is cutting interest rates, when you have money overnight, the brokerage siphons all the money, deposits it in an overnight facility, and earns a return on that cash balance. So cash balance interest is a big source of revenue as well. And then obviously service fees. All right, if you want to print a statement, if you want, I mean, most of them don't have service fees these days, so that's a declining source of revenue too. But service fees, another sector they build revenue off of. Now, Robinhood, Robinhood is the first company to introduce commission-free trading all across the board. People are like, wow, this is so great. How do they do it? The way they do it is they take all the order flow, and rather than sending it to an exchange, they send it to a dark pool. Dark pool is a place where algorithms fight with each other to front run your order. So it might not cost you much. It might cost you a cent or two. A lot of clients say, hey, you know what? I don't care if I get filled a cent or two off of where it's supposed to be on a market order, because all I care about is owning the stock for the next 5 years. However, that's not right, because you're still endorsing an industry of doing that to you, and that adds up. All right. So that's how Robinhood makes a big source of their revenues. It's been in the media. This isn't a rumor. This isn't slander. It's fact. All right. So interesting development in the brokerage industry. The good news for us is we have commission-free trading. I don't like it. As a business owner, I don't want anything for free. The things that are free cost me the most in my life. All right. And long term, short term, all across the board. I want to pay for a good service. So I'm not endorsing that one bit. All right. Uber in the news this morning. They're diversifying by launching a new app in Chicago on Friday. All right. And what it will do is match temporary workers to shift work labor. They're going to call it Uber Works. And it's expanding its offering from on-demand drivers, food delivery, to now on-demand labor and on-demand employment. Pretty cool. It comes at an interesting time as the main model of Uber is transportation, right? That's coming into threat with California passing a bill that mandates Uber employees are not contract workers, they're actually employees. So now there's healthcare costs for that. All right, the costs explode higher for Uber, for a company who's just barely making money now. All right, last but not least, oil prices are down and bearish on the fact that Saudi announced that they restored the full output of their facility. They got bombed just a little bit over a month ago. Not even a month ago. It's weeks ago. All right. That took half of its production offline. 5% of world supply was offline. The oil reacted higher. And now the report is they're back to 11.3 million barrels a day. They've restored their full capacity. And the comment that made it even more bearish said, we still have the kit and the tools to overcome any future challenges, said the oil minister. So that's a strong statement. So, we talked about this in the trading room. We said, where was the price before the Saudi facility bombing? That's what we're going to get to on the downside, because yes, it was news. It caused disruption, but that disruption was handled very well, and oil capacity is back online. All right. In today's markets, Japan's down 2%. Hong Kong's up 0.3%. China's closed for the week. India's down 0.5%. And in Europe at midday, London's down 0.5%. Paris is up 0.6. In Frankfurt and Germany, we have a bank holiday, so markets are closed. In the U.S., futures are seeing a little bit of a gain this morning, up 0.3%, 0.4%, on NASDAQ. All right. Crude oil is down 0.5%. The 52.42, we've now shaved off the 42 cents off the open of the 36. We're at 51.89 opening range low and pressing lower on crude oil. I think there's some more bearishness to come. Gold is flat, hanging around at 1507. And Bitcoin futures are hanging just at the 8,200 marker, up 0.4%. This morning we had a lot of news reports, and I have to look at the terminal to see all those news reports. All right, at 7:30 we had challenger job cuts. Challenger job cuts means what percentage of people, how many people did businesses cut from their payroll? We got it at 41.6 thousand versus 53 half. That's less than expected. It's a positive for the economy. And then at 8:30, we saw jobless claims. I'll tell you how they did. 219,000 versus 215 expected. So more people filed for unemployment than expected. And the prior number was revised higher by 2,000 people as well. So it's not a big revision. It's not a massively bearish number, but it is bearish. All right. It's another bad sign for the US economy on a weekly basis. And the big sign is tomorrow. After there's a industry term now called cataclysm that occurred on Monday, and the ism part is ISM with big letters. We have another ISM report. This time it's non-manufacturing index this morning at 10 a.m. 9:45 we have PMI services index. 10 a.m. we have factory orders, and in the afternoon there's a few Fed speakers. So today, yeah, you don't have as much of a busy calendar, but it's all eyes right now on tomorrow's payrolls report, the private jobs data that comes out monthly on the first Friday of every month, and very rarely on the second Friday. Very, very rarely on the second Friday, and it does happen. All right, so we're looking forward to that. We're going to be trading now with the Elite Room tomorrow morning at 8:15 a.m. So sign up for Elite. Come join us, see how we trade this report. You have a 14-day money-back guarantee. All right, markets are dumping. It's becoming harder now to trade than it was before, and you owe it to yourself to be part of a successful community and trade with other members. Trading is actually a team sport. It's not an individual game. The most dangerous thing you can do is trade at home in your bedroom by yourself with no accountability. Bad things happen. Ask me how I know. All right, that's all I got for you guys. You guys have a fantastic day. Manage your risk, trade with TRADEPRO. I think this morning we had a little bit of bearish flow early on, but I think the bears have made quite a mark already. If we start out really bearish and there's a lot of selling on high volume, stick to the downside. And if we start out to the downside with very weak volume, I think we might actually run some buy stops today, meaning we're going to go up in price temporarily to retest some of the key structure above. Where's that key structure? I'm going to turn around and tell our subscribers in a moment. You guys have a great day. I wish you all the best today. Send you love, joy, and happiness. See you tomorrow morning for the payrolls or non-farm payrolls edition of our morning market update. Take care. Have an awesome day. Goodbye. All right, trade pros in the room. Over to Mr. Box. Steven will talk to you guys about oil, and then we'll bring it back to Toronto to talk about equities. That's all I got for you today. Take care, YouTube, and goodbye. All right, Box man.